According to some sources, the US is not seeking to weaken the dollar as part of trade deals. And speaking of trade deals, it seems like the US and the EU are making progress in terms of tariff talks. China lowered their tariffs on the US from 125% to 10% for 90 days. And the US saw a lower reading in CPI, indicating that the inflation in the US is getting lower, getting us closer to the Fed's goal of 2% inflation. Well, what does that mean and how will it affect markets? In this video, I plan to go over all of that. What it meant, what we can expect in the future, and how I'm trading the markets today. Hey everyone, and welcome to Weekly Outlook number 12. There was a good amount of stuff thrown into the market. What it really came down to was trade negotiations happening with China and other countries, and good data for the US. Specifically, the US got an upbeat print on retail sales, and a step in the right direction for inflation. And on top of that, progress with other countries in terms of tariffs. Last week, we got a deal with the UK that really uplifted the dollar. This week, we got more indication that the US and China are cooperating and moving forward, which also uplifted the dollar. And now, as of today, Friday, we are seeing that the US and the EU are moving forward in terms of their negotiations. In my personal opinion, I think the US dollar has a little bit more room to go and can appreciate even further. However, it's super important to understand the risk in that now, considering that we are getting better growth and better inflation metrics. The Federal Reserve, as of last meeting, said that they are wanting to be more data dependent and they want to wait and see more positive news. Now, the Federal Reserve has said that they are willing to go ahead and adjust their goal, bringing the inflation goal a little bit higher. And if that's the case, we can see rate cuts coming in the near term future. Currently, there's a 91% chance that the Fed is going to hold their rates in the June meeting, a 66% chance that the Fed is going to hold rates on their July meeting as well. And traders are expecting a 50% chance that there will be a cut in September. 50% are saying that it'll be a 25 basis point cut, and 17% are actually saying that it will be a jumbo cut. So with that in mind, it's extremely important to go ahead and consider that we may be getting very close to the Fed's target rate. And as we see more progress in the US, the Fed will feel more comfortable in cutting their rates, causing a depreciation in the dollar. So looking at the inflation data, CPI is a measure of inflation that the Fed really likes to look for. And we can see that back in the COVID era, we were at 8% right about, and we've been trending lower. However, there was a time where inflation spiked up again, and now we're seeing that inflation has been consistently coming down for 1, 2, 3, 4 months in a row. And the target inflation rate, as we see here, is 2%. So we're only 30 basis points away from the Fed's target. Now, in terms of a currency strength, for example, the US dollar, when interest rates get risen, the dollar also rises. And when the rates come down, the dollar weakens. So as we anticipate CPI coming in lower than expected, and if the trend continues and we get to this target rate of 2%, the Fed is going to feel more comfortable lowering the rates, causing a depreciation in the dollar. And referencing the CME tool, we're about 2.5 months away from this move. Now, if we get more positive news and the Fed goes ahead and changes their expectation or their target, then we can see rate cuts coming in earlier than expected. And we'll know by looking at the CME Fed Watch tool. Now, if we see these bars kind of go ahead and fluctuate, and this one comes down and this one comes up, then we can expect that rate cuts are going to come in sooner than expected, and that'll ultimately change the direction of the US dollar. On my last weekly outlook, I shared there was 2 ways that the dollar index can react. Either this was a break, retest, and a continuation to the downside, or we actually continue upward and start trending upwards in the short term. And it seems like the second option happened. So on the dollar index, if we go ahead and look on the lower time frames, we can see that we've been consistently making new higher lows and trending upwards. In my opinion, I think that the dollar index can kind of go ahead and start filling this area right here, maybe retesting the 102 level or even the 103 level. Once we get there, I will start to go ahead and take my profits and start looking for a short entry on the dollar. Now, I could start doing that a couple different ways, but when we're playing the dollar or currencies in general, you're trading the base currency versus the quote currency. So you want to make sure you're trading the weaker dollar against the strongest possible currency out there. And right now, the two are the New Zealand dollar and the pound dollar. And what this chart does is show you the surprise meter. So when there is an economic release coming out, and the country has a positive or better than expected outcome, then the needle will move to the right in the strong direction. And if it has a worse than expected outcome, for example in the yen, the needle will move to the left, making it a weaker surprise. So hypothetically, if we were at the targets now and we are expecting that the Fed is going to cut rates now, then I would look for the pound dollar and the New Zealand dollar to go ahead and start going against the dollar. Now, going over my positions and looking how I'm going to manage them, this is the euro dollar. I sold initially in this area here, and I've been trailing stops as we make new lower highs. Now that we made this high, I trailed my stop here, and I'm going to ultimately target the 1.100 level or even the 1.09 or 1.0800 level. Now, I don't think we'll get that low, but you never know in this market. However, I do need to be mindful that as we get more positive news for the US dollar, as far as inflation and growth, the Fed could get more confident in their rate cut cycle. And if that does happen, then I will exit the trades appropriately as I see fit. Dollar yen was a good trade for myself. So on the higher time frame, the basis for this trade was I was anticipating more news and more moves in the right direction as far as tariff negotiations. Initially, we saw that India was having good conversations, and the Trump administration did say that they were having conversations with other countries as well, but they weren't disclosing it. So when we got to the 140 handle on the dollar yen, this was a good level of support on the weekly time frame. So I went ahead and entered here, and I've been scaling into this position very small. So we saw 15,000 units initially, another 15,000 and 15,000 here, and I'm just trailing my stops above structure. As we target this level here, the 148 or the 150, that'll be my ultimate take profit. Now this level here is the pre-tariff sell-off level. So when Trump on April 2nd went ahead and announced the 50% reciprocal tariffs, that's when there was an increase in safe haven demand and the dollar yen started to take a hit. So ultimately, I'm targeting this level here. Dollar Swiss, similar situation. So I initially got in at this level here. However, I was trailing my stops once this level of resistance turned into support. But when they had the Fed meeting on that Wednesday, I actually got trailed out of the position for a small profit. Jerome Powell did kind of sound kind of neutral to hawkish in that meeting, saying that he would feel more comfortable on more data and that there's a lot of risk in the present term of inflation concerns for tariffs. So when I heard that, my thesis for a stronger dollar got reinforced, and I went ahead and bought the dollar Swiss again for 100,000 units. And now I'm doing the same thing. I'm trailing stops as we make new higher lows. So ultimately, same thing. I want to target the pre-tariff sell-off levels here. So once we start approaching this level, I'll look to take profits and start looking for ways to go against the dollar. Dollar Canadian, me and the dollar Canadian have a love-hate relationship. So we never really broke this trend line, which is why I stayed in the trade. However, it was pretty much lagging against the other economies. So dollar Canadian, I was in the trade and it was just range bound here and it started actually going lower, but we did kind of make this channel here, and eventually buyers went ahead and stepped in, and now relative strength wise, the dollar Canadian has held up pretty nicely. So now I'm looking to target, similar to my other trades, the April 2nd levels to go ahead and take profits, and then I'll reevaluate to go short on the dollar. Thank you guys for tuning into my weekly outlook. I hope it was valuable and insightful. If you guys have any questions or opinions about the markets and what can happen next for the US dollar, feel free to leave a comment below. Thank you guys and have a blessed day. Bye-bye.